Good morning, welcome to Ainsley News. It's Thursday, the 19th of November. Silver, poised to surge, and so too Ethereum. Today we talk to the epic setup for the silver market, and at the end compare that to its crypto cousin, Ethereum, which too looks good poised for great things. Since the gold-silver ratio, or GSR, hit that record all-time high of 125 in March of this year, we've watched it fall, as expected, but also pause now 3 times before breaking lower. And the following chart we're going to show you is going to show that next leg down, and it could well be underway. Here it is here, the GSR. Crescat's Octavio Costa mused on Twitter as to what might be the environment for silver's next push. Political views aside, here is silver last time Democrats won a presidential election during a major economic downturn. I know that this time it's different, it really is. Today we have a Federal Reserve on a suicide mission while fiscal deficits are 2 times worse than back then. Here's that chart there from Crescat Capital. Also comparing it back to the 2008 elections to 2011 and what happened after the demos took leadership. His point of differentiation of now to 2008 is an important one. When Obama took the White House, the US was in the throes of the GFC, but before the new tool of QE or quantitative easing was unleashed, along with fiscal spending, seeing some of the biggest deficits in US history. The stimulus gun was fully loaded and being fired to full effect. Fast forward to Biden and we have another recession, but this time the gun is nearly empty, having nearly fired all its bullets, interest rates at zero, US debt at record highs, and the catalyst for the recession coming back with a bigger second wave, i.e. COVID, whilst share markets at record high valuations have fully priced in a vaccine-enabled full recovery. The beauty of silver is that it presents somewhat of an each-way bet. As a 50% commodity, it also enjoys the fruits of a reflation trade that will inevitably come once things bottom out. It is always important too to remember that relatively small size of the silver market and the effect on rotation of big money into it can have. Ted Butler puts that into perspective with regard to the massive inflows into ETFs and COMEX this year alone. This from him. By far the most important silver statistics concern the inflow of some 400 million ounces of physical metal into the world's silver ETFs and into the COMEX silver warehouses from roughly March 16th through to the end of July. Over a little more than 4.5 months, 330 million ounces came into the world's silver ETFs, or 220 million ounces into the largest single ETF, which is SLV, with 70 million ounces coming into COMEX warehouses, of which 30 million ounces came into the JP Morgan COMEX warehouse. Before explaining why I believe this 400 million ounce inflow of physical silver was the most remarkable development of the year, let me acknowledge that there was also a very large physical inflow of gold into the world's gold ETFs and the COMEX gold warehouses as well. Not only was the mix different than in silver, in that the roughly 60 million ounces of physical gold inflow was evenly divided between gold ETFs and the COMEX warehouses, 30 million ounces each, but the total gold inflow increased the total number of ounces in the gold ETFs and COMEX warehouses by 60% to 160 million ounces, whereas the 400 million ounces of total physical silver inflow increased total ETF and COMEX warehouse totals by only 36%, from 1.1 billion ounces to 1.5 billion ounces. Moreover, the 60 million gold ounces were worth well over $100 billion, whereas the 400 million ounces of physical silver were worth only $7 billion at the prevailing prices at the time of inflows. So where do I get off claiming that the inflow of 400 million ounces of physical silver is the most remarkable statistic of this most remarkable year? It has to do with how much gold and silver exist in the world in bullion form. In gold, there are 3 billion ounces of bullion in the world, out of a total of 6 billion ounces in all forms. The 60 million ounces of gold bullion that flowed into the world's ETFs and COMEX warehouse inventories, therefore, represent 2% of the total amount of gold bullion in the world. In silver, the 400 million ounces of physical metal that flowed into the world's ETFs and COMEX warehouse inventories represent 20% of the 2 billion ounces of world silver in bullion form, all in 1,000 ounce bars. There is a very big difference between 2% and 20%, a tenfold difference in fact. But we're not finished there. The 160 million total ounces of documented gold now in the world's gold ETF and COMEX warehouses represent just 5% of the 3 billion ounces of gold known to exist. In silver, that 1.5 billion ounces of the world's silver ETFs and in the COMEX warehouses represents 75% of the 2 billion total silver bullion ounces said to exist. There is an even bigger difference between 5% and 75%. It's 15 times. We're not saying that there's not more than 2 billion of ounces of silver in the world in all forms. I'm sure there is. I'm saying that there's only 2 billion of ounces of industry standard good delivery 1,000 ounce bars, and 3/4 of that silver is in the world's ETFs and in the COMEX warehouses. Converting whatever silver that exists outside the 2 billion ounces into 1,000 ounce bar form will take time, great gathering and processing expense, and the willingness of those holding other forms of the metal to sell, not something currently occurring or likely to occur in the absence of sharply higher prices. At this time and price, 75% of all the silver bullion thought to exist is locked up in the world's publicly traded ETFs and COMEX warehouses, leaving only 25% as conceivably available if the owners are willing to sell. No knock on gold intended in any way, but roughly 5% of the gold bullion in the world is locked up in ETFs and COMEX inventories, leaving 95% of the remaining gold bullion technically available. Plus, on a realistic basis, much more gold held in non-bullion form is likely to come to market at current prices than equivalent dollar amounts in silver. It became even more remarkable when you think about 400 million ounces of documented silver bullion suddenly coming into the world's silver ETFs and into the COMEX warehouse inventories in little more than 4 months. That's the equivalent of 50% of annual world mine production. Yes, the same could be said about gold mine production, but not existing gold inventories. Remember, silver is an industrial commodity, and as such, the vast majority of its annual production is used up in various industrial and other fabrication consumption, meaning no pricing model would ever allow for the equivalent of 50% of annual mine production to be suddenly taken away without a many-fold increase in price. Butler goes on to describe various theories around why the price didn't explode at the time, and even when it did take off in July, arguably not enough in the context of the above. Much of that revolves around JP Morgan's role, leasing that silver to ETFs and not delivering it, and the use of the COMEX paper price as the determinant, not the real physical market. On any level, it appears to be a big silver coiled spring, waiting for the scissors of physical supply and demand reality to cut the cord. Finally, it would be remiss of us not to talk about the spectacular rise of Bitcoin. This week in particular, Bitcoin rose 15% in just 3 days. Ethereum rose 7% over the same time. As we've written before, Ethereum is to Bitcoin as what silver is to gold. And just as we've seen in precious metals, when gold takes off, you often get a lag before silver follows, but then it outperforms gold as the GSR falls. That has played out time and time again in crypto markets as well. Alex Saunders of Nugget News has been warning of this rotation coming for a little while now, most recently sharing the following ETH-BTC chart, which should be read on a like-for-like as the inverse of the gold and silver ratio. There's that chart here showing that. Lovely little wedge going down there. Give us an indication of what's to come. He's firmly of the view that we'll see the rotation of BTC profit-taking into ETH anytime soon, and a breakout on the upside out of that wedge, with BTC coming off a little last night, as we may be about to see it. As always, perspective is everything. And this chart we're going to show next below shows ETH's journey since it hit $2,000 in 2018. For those that can remember when ETH hit $2,000. It was impressive. What's different now is the emergence of the DeFi giant, which almost entirely runs on the Ethereum network, and now the much anticipated ETH 2.0 being rolled out on the 1st of December, which is just around the corner. So interesting times there. Keep your eye on silver and keep your eye on Ethereum. Remember ainslieBullion.com.au for all things physical, gold and silver. ainsliewealth.com.au for all things cryptocurrencies. And goldsilverstandard.com for the gold and silver backed cryptocurrency built by Ainsley and stored at Reserve Vault. Enjoy your day, and we'll catch you tomorrow for end of week news.